December 13th, a huge date for all markets, including crypto. This is a 6-hour chart going back a couple of weeks. You and I were on the same journey, zoomed in. This is a volatile, uncertain, and also boring ride that we're on. In this video, I want to break down what is going on December 13th, why it matters on the macro, especially in terms of the shifting cycles of Bitcoin and crypto, and what it means for all of us. This is a 6-hour chart. The first things first, everybody, we need to zoom out. This is the zoomed out chart. I want to mention, I'm sitting here right now and recently, and I'm kind of like in this phase now where it's becoming urgent for me. And I mean that on the zoomed out macro cycle scale, I am trying to figure out what to do now. I'm trying to plan. And it's not always just so cut and dry for me, because I very much am in tune with the market cycles of crypto, this Bitcoin chart acting as a roadmap for altcoins for me. And so I'm watching it very closely, namely because we've gone from a swing high to a swing low from a cycle perspective below a very important bear market indicator, the 786. This is an area that Bitcoin has fallen below in previous cycles. We are there now. Things are becoming urgent for me to figure things out and to really commit to a plan. That's where I am right now. I want to talk about how December 13th ties into that. One thing I want to note, which kind of adds into this urgency, is this. And this is something that I discussed in a video the other day. Just one line. Investors may be surprised to learn that in the last 69 years on average, stocks did worse in the year before a recession began than during the recession itself. That is so important to me. This is creating urgency for me because we're seeing headlines right now about the recession of 2023. Things are going to get so bad. You see headlines, put your cash, put your money in the bank, save it in cash, don't invest. 2023 is going to be terrible. But the data suggests otherwise, which is to say the year before the recession, meaning 2022, historically will have proven to be the worst year. That means for me, the worst, there's no guarantees, but for me, in my view, the worst is potentially probably over. Put aside all of the macroeconomic data that we're talking about right now, but just look at Bitcoin charts. If we look at Bitcoin charts from bull market to bear market, the worst is over, likely, if things consistently continue to grow the way they have been. So here's where things get really urgent for me. It starts here. This is kind of the release of CPI data, tracking the inflation that is going on. And we've gone through this crazy ride in 2022 of inflation rising, topping out at 9.1 in June, and slowly kind of just falling recently. Now, I want to remind you of a headline that was from November 10th, 2022, around 15 days ago. Beleaguered tech stocks rocket higher after consumer price index shows inflation easing. So this was the numbers that were released. This is October, the October CPI data, 7.7. This brought on this headline. And as well, if we go to a S&P 500 chart, this is what happened because CPI data coming in, better than expected. Now, here's what's going on December 13th, right here. It's November CPI data. What happens then? Is it lower than expected? Is it just at expected? Or is it worse than expected? What's making it so urgent for me is just the fact that 2022 is now almost over, 2023 fast approaching, and we see this talk about 2023 being the recession, right? And that's when the media and whoever is going to finally define the recession, even though we're pretty much already in a recession. But for me, this means 2022, the worst being over, the bottom is getting very close. Now, if I go over here and I go to Trueflation, this is on-chain Oracle data giving us kind of a different perspective of inflation rates. And we've been tracking this as a potential leading indicator. And as time has kind of moved forward, it has proven itself now. This started out extremely speculative when I came across this app months ago, but it's actually proving itself now. You can see this topped out in March close to 12%, and we started kind of tracking, that's topping out at 12% in March, and then we go over here, and in March on the true CPI data release, we hadn't topped out yet until a few months later in June. So that's kind of where we started getting this hint of, you know what, this might be acting as a leading indicator. And then it slowly started falling, and we started saying, is there a shift happening in terms of inflation? And check this out. It keeps falling right now. And again, this is another data point that's kind of lending itself to my own urgency. And again, this is how I see the markets. This is how I'm seeing things and doing things. This is my opinion. And this is just all of the data coming together for me. But I'm seeing all of these things, and I'm kind of like, all right, you know, when we're just kind of going through this grueling bear market, it's just, I know where we are in the cycle, right? And it's kind of like, man, even here, we're just like kind of in the middle. Historically, there's so much room for downside for Bitcoin and crypto. But now that we're in this bottoming range, that could go on for months, and we can go lower, and we're going to look at that in a second. Now that we're in this bottoming range, and we actually see on-chain metric data, we see actual regular CPI data that's suggesting a slow shift happening. And I say slow because that's meaningful. This could be months in the making. So it's an urgent macro decision for me. And I don't want to use the word frantic because we leave emotion out of this, but I'm very urgently trying to figure out what to do right now to plan for the cycle shift, to plan for what's going to happen next. That's where my head's at right now. Now, one thing I want to note is this. We talk about December 13th, the CPI data getting released for November, and we're going to see what that looks like. This is most intriguing to me tying into the story. We've had the bear market for S&P 500 and just traditional markets, and we've had these lower high Fibonacci's, right? So most recently, we're actually testing a lower high Fibonacci on this chart. So that last swing high to swing low, S&P 500 making its way up to this Fibonacci. What happens here, especially as we go into the next few weeks and CPI data is released? On the short term, is this getting rejected? Are we going to see rejection at the 50-week moving average confluent with the 786 line of this lower high? Is this bear market going to continue on this chart where we're getting resistance to the downside? I'm preparing for that, especially because I came across this tweet by Caleb, and he just does such great analysis of equity markets. One of the things he was tracking here is the VIX, the volatility index for S&P 500. So he said, as I've shared before, a profitable strategy in 2022 has been buy risk assets when VIX is greater than 30, sell risk assets when VIX is less than 20. Based on this strategy, there could still be more upside for risk assets until VIX is less than 20. Let's go look at this chart. This is how it is illustrated. When fear rises, and that's what's happening here. You see these moves to the upside. Fear rising, he's saying, you know, when it's above 30, that's kind of a good indication of buying. And then when it's falling and fear's falling, and then we start falling into kind of greed area, that's kind of a good indication of selling. Now, what's notable to me right now is the fact that this is approaching that 20 area that he mentioned in his tweet. So we're approaching that 20 area all the while. Again, we go to the S&P 500 chart and we're approaching this short-term resistance. So on the short term, and this is what makes it kind of dicey for me mentally, on the short term, it looks like there's absolutely this room for resistance for markets. There looks like there's definitely room for another lower low for markets right now, for Bitcoin included and crypto included. And all the while, though, we have this macro data coming in a couple weeks, like 3 weeks or so. And that's so notable for me because I'm trying to make these macro decisions in regards to these cycles. And it seems like really the next few months, everybody, are going to be probably the most defining moments for the cycle shift of crypto and even equity markets. And so here we are, and I'm sitting here and I'm trying to evaluate my plan. And I'm not going to sit here and tell you what to do, everybody, but I'm showing you all of this data to kind of make one simple point. Urgency on the macro is happening right now. I really think it is. And it's all just because we have the technical analysis aspect of crypto and the Bitcoin chart that we have, this roadmap that we have. You put aside everything else, and I say that often, we have this shift from historical data alone, and we have this bottoming out of this bear market. We could go lower, yes, but we're in this final phase of the bear market that could last months. I say final phase, it doesn't mean like one more week. This could be, a few months, but we're in that final phase. And all of this just data coming together, pouring together. And again, I can't highlight this enough. Investors may be surprised to learn that in the last 69 years on average, stocks did worse in the year before a recession began than during the recession itself. For me, that helps put 2022 in perspective. For me, when I start seeing the 2023 negative headlines, I think there's an agenda there. And I think oftentimes big money doesn't want retail getting in on the opportunity. And I think, especially even in the first part of 2023, there's going to be opportunity. I think as we shift cycles, there's going to be opportunity. So all of this coming together, and here we are, everybody, December 13th on the charts. Mark your calendar, especially as we are now below the 786 line, and we try and identify where the bottom's going to be for Bitcoin. This kind of just getting thrown into the mix, a huge piece of data getting ready to come out and really shock markets, move markets one way or another. So mark your calendar, everybody, prepare. And that's what this is all about. It's speculation, it's visualization on these Bitcoin charts, on these crypto charts, and it's all to prepare. Nobody knows what's going to happen next. We have to make our own decisions financially and figure it out on our own, what we're comfortable with. These are all visualization tools as all of this data comes together. So let me know your thoughts in the comments below, everybody. I hope you're doing well out there, especially as Bitcoin kind of does, if we look at that 6-hour chart, trade sideways right now. Hang in there. I appreciate you. Hit the subscribe and like. I'll see you in the next video. God bless.